is for you and how exactly it's going to affect you, your economy, your money, and your pocket. On that part of the show, we will also have our guest in studio, resident analyst Ken Geshinga. He is chief economist at Mentoria Consulting. He, of course, will lend us his expertise on just how to interpret what has been happening in the news this week and extrapolate that on just what we can expect going forward. Also, over this 1 hour, the second part of the show, we will be lending a heavy focus to the trading world. This time, a special edition bringing in a globally renowned investor businessman, Tony Elumelu, all the way from Nigeria, here in Nairobi, with an exclusive interview with our very own Abdi Agina. That, of course, is in the second part of the show, so you don't want to miss that. As ever, we want to start off at the exchanges and look at the currency pairs as currently pegged by the Central Bank of Kenya. Well, the dollar shilling pair pegged at 176, 196 buying and selling levels. While the British pound, that of course is the pound sterling, 143.03, 143.34 selling. The euro, 124.02 buying, 124.30 selling. Of course, these rates do vary slightly depending on the commercial entity that you do walk into to make your transaction. Well, NSE turnover, NSE performance for the day. Well, this, of course, are the latest numbers from a concise, comprehensive trading session. Turnover, 694 million shares sold in the last trading session. Shares traded to the tune of some 19.7 million, and the NSE 20 share index pegged at some 38.17.04. Bonds traded to the tune of some 1.6 billion shares worth. Well, what are the most active stocks of that trading session? Barclays Bank of Kenya, Equity Bank, Safaricom, Mumias Sugar. Barclays Bank of Kenya, 10.22 million shares bought and sold. Equity Bank, volumes of some 6.88 million counters. There, Safaricom, 1.80 million shares, and Mumias Sugar, 732,200 shares bought and sold. Well, what are the bears and the bulls? Who have been the losing shares? Who have been the gainers of that particular trading session? The winning stocks, these are the bulls: Sanlam Kenya, EGADS, Longhorn Publishers, TPS East Africa. Well, Sanlam trending upwards to the tune of some 7.53% to 25 shillings flat. EGADS up 7.32% to 22 shillings flat. Longhorn Publishing up 5.32% to 4 shillings and 95 cents. And TPS Serena up 4.62% there to some 34 shillings flat. Well, who have been the losing stocks? These, of course, are the bears: Deacons, BOC Gases Kenya, East Africa Cables, and Express Kenya PLC. Deacons down 5.45% to 2 shillings 60 cents. BOC Kenya down 5.26% to some 90 shillings flat, while East Africa Cables has shed 5.05% down to 4 shillings 70 cents, while Express Kenya is down 2.17% on trading that day to 4 shillings and 50 cents. Well, these have been the stories that, well, have been making headlines and, of course, driving the transaction you've been seeing there at the Securities Exchange. And we start off in the tourism sector, where the Parliamentary Committee on Tourism, Sports and Culture, well, has been meeting various stakeholders, this time, of course, in the tourism town of Malindi. And that committee, of course, is now calling on government to increase allocation of funds to the Ministry of Tourism to promote the sector. The committee that is chaired by, well, Dr. Victor Munyaka said that tourism last year got an allocation of some 4.5 billion shillings, despite the fact that it contributed to revenue of more than about 120 billion. Dr. Munyaka said that they will lobby to ensure that the funds are increased and ensure that even the Kenya Airports Authority unlocks more than 6 billion shillings deducted from both domestic and international tourists.
We had a very good and productive meeting with the peers, so that the committee may be able to understand what the ministry is actually planning to do to really promote tourism in Kenya. And we've really discussed a lot. And what is common and what is actually coming out is that the ministry has been underfunded in the past. And this committee is going to take the opportunity to really lobby for more funds.
We've been trying to get, partners, financiers on board to help the hotels. But as tourism numbers pick up, as we've been marketing and the numbers are growing, we expect the hotels to use some of the money that they get to refurbish, even if it's in phase.
Well, away now from tourism and this time to development, where development projects could see a drop in financing if the current trajectory of debt levels persists. While speaking at a press conference on the status of the African Development Bank funded projects, Cabinet Secretary for National Treasury Henry Rotich said, however, that government was working to control runaway government spending.
The debt ratio is, of course, an issue, and we follow the trends and development across the continent. And we work also closely with the other multilateral development banks and institutions, including the IMF. So, of course, if we see the debt ratio of a country, accelerating, going up, we get concerned, and we always give our views.
Development expenditure must be, of course, we try to safeguard by all means to ensure that we don't affect growth. But, when you want to reduce your deficit and all that, all must be affected in a way. But we do it in a manner that growth do not suffer. So that is the balancing act that you have to do. It's not very easy the way one can say, oh, because they have seen we have adjusted our development spending. Yes, we have adjusted because we have to live within our means.
Well, staying with government spending now, civil society organizations have been holding a public forum on accountability for public resources. The organizations, including Transparency International, the Africa Center for Open Governance, or AFRICOG, and Kenyans for Peace with Transitional Justice, KPTJ, lauded the recent High Court ruling terming sections of the Public Audit Act of the year 2015 unconstitutional. The act has been viewed by critics as an attempt by the legislature to muzzle key powers and roles from the Office of the Auditor General.
In just 5 years between 2013 and 2017, the government borrowed 2 trillion Kenya shillings. The Euro bond, which we borrowed $2 billion just the other day, is several times the size of the entire Rwandese economy. And yet, the Office of the Auditor General consistently raises questions about how these resources are spent.
Well, moving on, a multi-agency team cracked down within Kericho's Central Business District, recovered dozens of Kenya Revenue Authority KRA stickers in one of the business premises in the town. The team, comprising Kenya Revenue Authority officials, the Kenya Bureau of Standards, and the Anti-Counterfeit Agency ACA, and the National Authority for the Campaign Against Drug Abuse NACADA. The police and public health officers had been in the county since Tuesday. The business owner who escaped arrest operates an electronics shop and a top-of-the-range imported wines and spirits outlets in the back of the same shop. He has been using the KRA stickers to allegedly defraud the government of millions of shillings in revenue. Kericho County Commissioner Mukhtar Abdi said that they had launched investigations of how the business owner obtains the stickers.
One, they have 190 pieces, or the total number of stock they have is 190. The various products, their names are indicated here. Some of them are very expensive, but they also have 190 in stock, but they have 789 KRA stamps. Yeah, 789, And this is a discrepancy. If you have a KRA stamp, it's supposed to be commensurate to the product you have. So this is a discrepancy which they need to prove. Number two, they don't have excess duty stamps on the product. They also don't have ISM, that is KEBS standardization mark. Import standardization mark they don't have. And therefore, we are suspicious that somebody has been evading tax.
Well, moving on, the consumption of petroleum products fell year on year due to the decline in economic activity occasioned by headwinds in the first quarter of the year. According to the first quarter 2018 petroleum industry report, consumption was down 3% compared to last year, even as uptake of renewables surged. Julia Wino has more on that story.
Trends in the oil and gas industry, especially in the downstream sector, form a good barometer for economic performance. The ups and downs of the sector impact significantly on the performance of the rest of the economy. In fact, as analysts say, the sector will play a major role in ensuring efficiency in delivery of the government's Big Four agenda.
And one of the reasons why the Big Four agenda has been highlighted is so that we can break this vicious circle until finally it's no longer there. So that finally we don't have to talk about unemployment.
In the first quarter of 2018, consumption of natural gas was up 3%, while coal consumption over the period also rose by close to 1%, reversing declines over recent years and pointing to a resurgence of the manufacturing sector. Renewables, however, recorded the highest growth in consumption, growing 6.3%, driven by expansion of wind, solar, and hydro power.
And if the oil and gas is well understood, then it starts contributing, significantly to the macros, the macroeconomics, the GDP for that matter. So it becomes a key sector in the economy.
Expectations are, however, high that fuel demand will pick up this year, following the wait-and-see attitude adopted over 2017 as the public and private sector hastened the implementation of economic development and business strategies to drive the country's economy. The proposed new liquefied petroleum gas regulations are also expected to promote the consumption of cooking gas.
You all know that the LPG market today is quite difficult to develop for many reasons. One of them being a lack of infrastructure. Another of them being a regulatory framework which is not enforced and which deter investors to invest in this LPG market. And we are about, I think, to change this and to be able to develop the LPG market. The regulator has worked on a new legal notice, 121, and it has been proposed to the board of ERC recently, and the board approved the legal notice the way it is. It will be soon proposed for public remarks before it is gazetted. We hope maybe around June or July.
Julie Owino, KTN News.
Well, now to some two biggest stories of the week, both on mobile now. Leading communication service provider Safaricom and PayPal have introduced a new service which registered M-Pesa customers can easily buy and secure goods and services globally. The service is only available to users in Kenya with qualifying M-Pesa and PayPal accounts. Now, to access PayPal, interested parties need to register both with M-Pesa and PayPal. The charges for normal transactions still apply, with an exception of 3% of the amount converted from USD to shillings on withdrawal and 4% of the amount then sent to your PayPal account. The new venture provides an opportunity for the Kenyan market to boost their reach and grow their businesses internationally.
We started this journey towards moving M-Pesa just beyond the Kenyan border, and we are moving in terms of enabling Kenyans actually be able to go and buy goods and services from any merchant worldwide. So we started with initially getting Kenyans who got websites to be able to connect to M-Pesa and be able to sell to Kenyans and receive payments via M-Pesa. So we started with the SDK push. We moved forward to Google. We connected to Google Play Store, and now you're able to, Kenyans are able to buy products and services from the Play Store quite easily, seamlessly through M-Pesa. And this is the next step in this evolution towards opening up M-Pesa for our consumers to be able to access markets beyond the Kenyan border. So PayPal is the largest, basically, wallet or payments platform in the world in terms of it has 227 million customers operating over 200 countries. What better way than two big brands actually collaborating and opening up the Kenyan space and enabling Kenyans to be able to access markets outside Kenya.
Well, at the Mobile 360 West Africa event, the GSMA announced the launch of the GSMA Mobile Money Certification, a global scheme for mobile money service providers to offer safer, more transparent, and more resilient financial services to the millions of mobile money users right across the world. The certification relies on an independent assessment of a mobile money provider's ability to deliver secure and reliable services, to protect the rights of consumers, and to combat money laundering and terrorism financing. The certification is designed to enhance consumer trust and accelerate commercial partnerships by setting a high bar to which all providers can aspire. The certification scheme follows a 3-year consultative process led by the GSMA, which worked together with providers in Africa, Asia, Latin America to understand the challenges of their businesses and assemble best practices from these markets. Certification is open to all mobile money providers, whether they are a mobile money operator, a bank, or any other type of service provider. Now, Orange Cote d'Ivoire, Safaricom from Kenya, Telenor Microfinance, which runs Easy Paisa in Pakistan, Tigo Tanzania, that belongs to the Millicom Group, and Vodacom Tanzania are the first to be certified, covering about 98 million accounts in these 4 markets. The certification promotes the application of consistent risk mitigation and consumer protection practices across key areas of those businesses.